We're very excited today to bring you the latest episode of the Salt Crypto Show, featuring the second appearance from the great PlanB. So PlanB, he's also at 100 trillion USD on Twitter, is a pseudonymous Dutch institutional investor with a legal and quantitative finance background. He created the Bitcoin stock-to-flow model, where he uses scarcity to quantify Bitcoin value. The stock-to-flow model is not only applicable to Bitcoin, but also to gold, silver, and other assets. PlanB is currently working as an investment manager in a team managing a multi-billion-dollar balance sheet. Why the name PlanB? So PlanB refers to an alternative plan for quantitative easing or money printing by central banks, negative interest rates, and currency debasement in general. 100 trillion USD, which is his Twitter handle, is a reference to Zimbabwe's $100 trillion US note during the 2008 period of hyperinflation. Hosting today's talk is Anthony Scaramucci, who's the founder and managing partner of SkyBridge Capital, which is a global alternative investment firm. Anthony is also the chairman of SALT. And with that, I'll turn it over to Anthony for the interview.
Well, PlanB, thank you for coming back on Salt Talks. You know, it's interesting. I went back, our first interview, Bitcoin was in the mid 20s, $20,000 per coin. I don't remember the exact number, but it was like 25, 26,000. It rocketed to 69,000 and it came back down. But frankly, Bitcoin's at $40,450 as we're speaking right now. And for any Bitcoiner that has a historical reference point of Bitcoin being a couple $100, $5, there's been nothing but a meteoric rise to Bitcoin. Why do you think people, human nature, investment theology, why do you think people are so willing to attack Bitcoin because of its volatility and are not able to step back the way you are to see the true arc of Bitcoin's success?
Yeah, Anthony, thanks for having me again. And in that interview, that interview you mentioned, we probably joked about Bitcoin going up and then crashing back to 40,000 one day, and there we are today. And I think it's an excellent question about the volatility because, I mean, Bitcoin is so volatile, it gets attacked for that attribute, but with the volatility comes the return. And I guess experienced investors know that there cannot be return without volatility. But I've seen it personally with the stock-to-flow model and with Bitcoin now 3 times up and 3 times down, that when Bitcoin is up very much, everybody wants to buy it. And stock-to-flow model and PlanB is the man, the myth, the legend. But when it's down and where we are today, and we experienced that in March 2020 with the COVID, when COVID first hit us, but also in March 2019 when I published the article, we were really very much down. Then it's all Bitcoin is dead and it's a bear market. It will go to zero. It seems like a black or white thing, and investors and people in general seem to forget that it's just volatility and the overall trend. If you, for example, look at the 200-week moving average, the 4-year moving average, the overall trend is going up and never goes down. So yeah, it's. I guess it's a question of perspective.
Okay, so it brings up a good point because I follow your stock-to-flow model. You explained it brilliantly the last time you were on. I'd love to have you recant it a little bit because we've added a tremendous amount of listeners since you last came on. Your stock-to-flow model, from a trading perspective, short-term, Bitcoin traded in the lower band of the model. You're being criticized for that. People are saying that the model is invalidated. But me doing this for 33 years, studying assets, securities, cash, dollars, foreign exchange, when I step back and look at your model, I think it is the most prescient because there's a expression that Warren Buffett has. I would rather be roughly right than precisely wrong. And the point being is when you step back and look at it, it's doing more or less what you said. So how do you respond to these critics? And describe for us once again your theory behind the stock to flow model.
Yeah, excellent point. And that Warren Buffett quote, I use it a lot. It goes back to the volatility argument. If an asset is very volatile, then the chances of estimating or evaluating it very precisely are lower than if it's an asset that doesn't move very much, so like gold or actually any other asset. So to try to predict or evaluate Bitcoin is a very, it must be a very rough estimation. And you're right, the stock to flow model is very rough. So stock to flow is basically saying that if an asset is scarcer, it should be more valuable. And well, how do you quantify scarcity? There is a known measure, that's the stock to flow measure. It's the number of years it takes for a reserve in a certain asset to replenish that reserve. So for gold, there is 60 years of production above ground stock. And so the stock to flow ratio is 60. So the scarcer an asset, the higher the stock to flow ratio, the higher the value of that market should be. And it's a very principle-based, very intuitive thing that scarce things are more valuable. And this model very roughly, very simply as well, because it doesn't use any other input variables, any other factors to value the Bitcoin. It uses that same scarcity to value Bitcoin. So it's very rough. It's very not precise, and I guess it would not be very usable for trading. More than investing. So it's really a very rough compass, if you will, for investors.
What do you think Bitcoin has been unable to sustain its momentum over the past 6 months?
Yeah, there's a lot of stories about manipulation, about the futures ETF coming alive with all the possible manipulation around that. There's a lot of speculation about central banks pushing the price down, much like in the gold market. But I think it's much simpler than that. We saw a China miners ban halfway last year, and that wiped out half of the hash rate, half of the security of the network. That was a major thing, major structural event, macro event, you might call it even for Bitcoiners. But that wiped out half of the hash rate, and all the miners had to move and relocate their stuff to the countries around China and to America, Texas mainly. So that was the number one reason, very obvious, very clear, to impact the price of Bitcoin. And currently, obviously, a lot of tech stocks are going down. The S&P goes down, and a lot of other assets go down because there is a risk of interest rate rise, and the Fed has spoken about tapering, about cutting back on the quantitative easing. That helped any asset increase in value, if it was real estate or stocks or Bitcoin. So if they would stop, if the central banks would stop the quantitative easing, the money printing, that would certainly impact assets, as would rising interest rates, of course, influence the asset valuations negatively. But so that's clearly what's going on right now. And by the way, I think they're just talking the talk and not walking the walk. They normally try to push asset prices down, the central banks, by just mentioning rate hikes. And I don't know if they're really prepared to go all the way and crash the stock market, for example. In my experience, they won't run that risk, but it will be a very interesting couple of months, and that's, I guess, the main topic right now. And a lot of tech stocks are being hammered as we speak.
Yeah, I mean, I think the Fed did a good job of jawboning, and you're right that and I don't. There's no way they're moving 6 to 8 times this year and all that sort of nonsense. They have no ability to do that, and not only that, they've been buying assets at $1 million a minute since the crisis started in April of 2021, and they're buying assets right now, as you and I are speaking. But I guess, are the risks associated with growth assets, early adopting technological assets, are they higher today than they were 2 years ago? And if they are, has your view of risks associated with Bitcoin evolved since we last spoke about a year ago?
Well, yes and no. I think there's a lot of risk out of the system right now. So there was a risk of, for example, before the halving, there was a risk that, there was another mining death spiral. So that miners and Bitcoin would not survive the halving, where the revenues for the miners would halve. Well, we obviously survived that. And then there was this big risk of China banning and China attacking Bitcoin. Well, obviously that risk has gone as well, because China is no factor of influence anymore. They stepped out of the Bitcoin market and pushed all the investors and miners away. So I guess there's a lot of risk that was in the market 2 years ago that is gone right now. On the other hand, I think Bitcoin is one of the last assets that is, for example, not supported by the central banks, like stock markets is. So there's a lot of volatility in Bitcoin, and I think it's here to stay. So there's a view that, like all the big tech stocks like Amazon and Google, that all the volatility and risk is in the beginning, before the IPO or just after the IPO. There's a lot of legal risk. There's a lot of technology risk about a new technology making it or not making it. But I think, and then later on, if the adaption kicks in, then that risk goes away. And a lot of people, a lot of investors view Bitcoin that way. So right now we're a little further in the adoption, and the volatility should go away. But I think Bitcoin is volatile by nature, so there is a chance that it will not be the same like all the high-tech stocks, Amazon and Google, and so that the volatility will stay, and that is also the source of the high returns, and because it's a double-edged sport. If the volatility goes away, the returns go away. So, but personally, I hope the volatility stays, and I think it will.
We're starting to see countries, states, cities embrace Bitcoin. Why is that? And do you think that trend is going to continue?
I certainly think that trend is going to continue. And as a matter of fact, there is rumors in the market that a second country after El Salvador will adopt Bitcoin within 3 months. We don't know which country that is, or where those rumors. We'll talk about it. And there's a lot of countries thinking about it. And well, I think it's a very smart move, to be honest. If we look at El Salvador, if you declare Bitcoin as a strategic advantage, as a technology that will help your country and your citizens, and you make it legal tender like El Salvador did, then you attract a lot of Bitcoiners, technology, brains, capital, and much in the same way that America did with the Silicon Valley. If you embrace technology like Silicon Valley did, you attract all the engineers and all the capital and venture capital, and that will bring great prosperity to your country. So I think what El Salvador did was very wise. We saw it playing out last couple of months. And El Salvador is now one of the few countries in that region that has a positive growth trend in tourism, in general economic growth. Especially countries with a currency of their own that doesn't do very well because they made policy mistakes in the past. They printed too much money. They had too ambitious government programs that had to be financed. And so countries like Venezuela, Turkey, Brazil, Mexico would be ideal candidates to make Bitcoin legal tender, like El Salvador did. And that will, I'm sure, that will bring great prosperity. And it will cut that, the power that the IMF has over you. So, yeah, it's a risk as well, because the IMF will fight like it does with El Salvador, and it will maybe not extend your loans, and you will have some troubles there. But the money will come from different parties, from Bitcoin investors, from venture capitalists. So yeah, I think that will be the big trend of the future. And in fact, that might very well be the trigger that we need to make the next step up, the next 10x, if you will.
Plan B, as a follow-up to that question, Fidelity put out a great annual report on Bitcoin and crypto, and they were specifically focused on Bitcoin. And the argument they made around adoption of Bitcoin by sovereign countries was basically a game theory approach, whereby, there's a saying in Bitcoin that things happen slowly and then all of a sudden, right? And what could happen with Bitcoin as people start to lose more trust in sovereign currencies is that various countries feel like they need to own a significant amount of Bitcoin for this shift to a Bitcoin standard, or whatever you want to call it. And thus you'll start to see countries accumulate Bitcoin over the next couple of years, just so they can get ahead of this massive supply crunch that we're going to see. How much do you subscribe to that theory, that sort of game theory approach, that the countries that buy now are obviously going to be in a very advantageous position when we start to see that supply crunch potentially over the next few years?
Oh, I subscribe to it very much. I think it's very true. The whole Bitcoin concept is full of this kind of game theoretical elements. And it's the same game theoretical thing that's also true for individual investments. Like the early ones get all the profits, and the earlier you get in, the more profit you make. I mean, Anthony was telling about $20,000 Bitcoin the last time we spoke. I think that was about the time that your fund also started, which obviously, looking back, was a very nice entrance level that current investors cannot make, and that will be the same with countries. So I don't know what the average price level was that El Salvador started investing, but yeah, the first mover advantage is huge, and it must be a very difficult decision, as it is a difficult decision for individual investors, and especially for institutional investors, but certainly even more for countries. But I guess you don't have to go all in. You can, like El Salvador, also they have two legal currencies, legal tender. It's the dollar is also usable in El Salvador, so you can start slowly and step up that game.
Why do you think the IMF is so hot at El Salvador, right? It's gone beyond just saying, yeah, we don't think this is a great idea. And they're making now threats toward El Salvador about, their debt and borrowings from the IMF. Why do you think it's so vitriolic? Is there some concern, do you think, from, global elite economic actors and supranational organizations that Bitcoin could disrupt sort of their monopoly on global money supply?
Yeah, I think there's legitimate fear for more countries doing the same as El Salvador did. And that, of course, diminishes the power that the IMF has and that the central banks, especially the US central bank, has over countries like that. So I would be very afraid. I don't think they can stop it unless with force. And we've seen many examples in the past that, of course, the diplomatic and financial aid is the first step, and then force is the second step. So think it's very, very interesting to see what happens and what the IMF does next, because it did urge El Salvador to cut the legal tender standard for Bitcoin, but El Salvador said no. So yeah, what's the IMF's next move? They must be very afraid, because El Salvador is a very small country. It doesn't have an impact on the world economy. So why are they so aggressively and so fiercely fighting El Salvador? It's an interesting question. I don't have the answer, but sure to watch it very closely.
Let me test an answer on you, because I'm going to challenge you a little bit. Plan B. I think you do know the answer. They have a monopoly on money, and they have a monopoly on control as a result of their monopoly on the money known as fiat currency. And they don't want countries like El Salvador to break that, because they use it as a political weapon. They use it for sanctioning purposes. They use it to grease the skids of a whole host of different things that governments work on. And since they can print it, they can finance things at very, very low cost. It has an absolutely horrific effect on the middle class and the lower middle class. I grew up in a blue collar family. They've ravaged these blue collar people. Plan B. We turned aspirational working class families into desperational ones as a result of their policies. So, am I wrong? Push back on me. Tell me what I'm getting wrong.
No, I think you're right. And I didn't want to go there. I didn't want to mention it. But since you mentioned it, that's, of course, exactly what the IMF is doing. And it's not very different than what normal banks are doing, right? And I'm saying this as a guy that worked for banks and insurance companies and pension companies. Having loans, having investment in loan and giving loans out to people is a great business. And you want to keep those people as long as possible on those loans and paying interest. So the best thing that would happen is if a person or a country, in the case of IMF, would get, you would provide the loans, and they'll pay the interest, and you'll keep them on the loan, on the leash, as long as possible, because you have full control over those persons. And I guess it's very brave of El Salvador to get loose from that position, and it might be because there was really no other way, but it might also be because they have a volcano, they have some economic power too, so they can build on that, and the same is true for persons. You can work, you can get rid of your loans, your Visa card loans, and all that, and I think it's a very smart move.
We've seen an explosion in altcoin activity, including Ethereum in the last year outperforming Bitcoin. But the altcoins also have greater volatility. How do you evaluate the altcoins relative to Bitcoin, and what do you say to altcoin investors?
Well, from a investment point of view, I think it's a great move. I think people that invested in Ethereum did better than I did last year, because of course, I'm a Bitcoin maximalist. I believe in the decentralization that Bitcoin brings, and the fact that it's the biggest one out there, and that Bitcoin is a protocol. But I sure see a lot of business cases that maybe do not depend on that decentralization as much as a money use case would be, as a Bitcoin use case would be, but more on the ICOs that we saw, or more recently the DeFi and NFT markets that are built on other coins. So yeah, I certainly see it as a very broad ecosystem. I am a Bitcoin maximalist, so I think that in the end, NFTs and DeFi and all that will be built on the much more secure and decentralized Bitcoin chain. But yeah, I can see it's happening right now on Ethereum and Solana and all the other coins, and that it has network effects too. So it might be too late for Bitcoin to to start that as well. But it's certainly very interesting. But for me, the decentralized part, so the fact that Ethereum, for example, the main Ethereum chain runs with one company, Infura, and if there's something wrong or if a government wants to control that chain, it can go to one place and close it down, and then it's over. That's why all the predecessors of Bitcoin failed. And with Bitcoin, of course, there's 100,000 nodes. Everybody can run their own nodes easily, and governments cannot close it down. And that's I think when there's a need for decentralization in a crisis situation, or when a government or a company is trying to take control of a chain, then you'll see the big advantage that real decentralized chains like Bitcoin, and in fact there's only one, is Bitcoin, has. But right now I see a very diverse, a very broad spectrum of coins and tokens that are doing very interesting stuff, to be like NFTs. That's just brilliant. It's also pump and dump. It's also, you see the same thing as with ICOs, that it's the Wild West out there.
Well, this is a follow-up to that PlanB. There's this existential debate between proof of work, which is Bitcoin, and proof of stake and other models that altcoins use to power and verify their network. And, as we all know, Bitcoin has never been hacked and the Bitcoin blockchain has never gone down. That can't be said for a lot of these proof of stake chains. So, something like Solana, which is one of the best performers in 2021, has had issues with outages. There was also a hack of a wormhole between Ethereum and Solana in recent weeks. That led to about $300+ million worth of Solana wrapped Ethereum being pilfered. But there's also, a lot of commentators who say, well, Bitcoin's not the future because proof of work is not environmentally friendly and all those types of things. But what do you say to people who are huge advocates of proof of stake and think that, any crypto future has to involve proof of stake? What is, for our listeners who are less familiar with the trade-offs between those two, why is Bitcoin, the true store of value and the true decentralized network that's going to be a durable store of value over time?
Yeah, well, that's exactly the point. The proof of stake versus proof of work. And proof of work with Bitcoin, it is the most important thing that Bitcoin added to the already existing technologies like asymmetric encryption that we do with the public and the private keys, and the peer-to-peer network that we know from BitTorrent. So Bitcoin is basically that asymmetric encryption, BitTorrent, peer-to-peer kind of network structure, and proof of work. And proof of work is what makes the coin secure. So you need miners, you need to spend real dollars to hash the blocks and to secure the chain. And with proof of stake, you sort of go back to the fiat world where the one with the most coins, the one with the most value invested in that chain, has the power to do whatever they please. And it's, so in my view, it's a step back. Yes, it doesn't take all the mining, it doesn't take all the miners and all the power that's required with Bitcoin. So you can label it, you can marketing it as environmentally friendly, but it sets you back one step to the old system that we know, the fiat system. So the ones with the power, with all the coins, with the money, they run the show, and that's what you don't want. For me, it's clear that proof of work is the only thing, and proof of stake is just a step back, and that's also why you see those problems that you mentioned. Like, it can be abused by the happy few, and
right.
And maybe that's okay for an NFT use case or for a DeFi use case, but it certainly is not for a global money use case.
there's been an ebb and flow in global regulation around crypto and Bitcoin. China obviously has stepped in and banned any Bitcoin mining or Bitcoin activity. Generally, India, it sounded like they were going to ban it. Now they're planning, it sounds like, just to tax it at around 30%. Different countries have also evolved their views on regulating Bitcoin. In the United States, it's still an open question, but it's pretty apparent they're not going to ban Bitcoin. It's just about how they're going to treat Bitcoin and other altcoins in the crypto ecosystem. So as a European looking at the United States and looking around the world, but particularly in the United States, what do you think regulation will look like, and how do you think it'll affect Bitcoin prices and the blockchain?
Oh, difficult question. I don't know how they will look like, but I think the US has done a better job than China in not banning it, but regulating it and taxing it. And I guess that's the question that all the governments have to answer for themselves. Do we embrace this new technology, this new money technology, or do we ban it and kill it? And I guess it's the same game theoretical arguments at play, that the first mover advantage that a country has by putting great regulation in place, that brings them all the engineers and the brains and the capital and venture capital. That's something that they have to really consider. And I guess America is doing a better job than China there. But of course, Canada, Europe, and even El Salvador are seeing this as well. So I think in the end, it will be a competition, and the company or the country that has the best regulation will win this game. And the next crypto valley, if you will be in the country that has the best regulation. So yeah, and I guess from an origin point of view, America with its freedom and entrepreneurship should be well positioned to capture a large share of this new technology market.
Well, Plan B, let's wrap it up there. It's been a pleasure to have you on a second time here on Salt Talks to follow up on the brilliant conversation that we started with a couple of years ago when we first dived into Bitcoin on the SkyBridge side of the house. So it's a pleasure to have you on. Hope to talk to you again soon. And thank you, as always, for all your wisdom related to Bitcoin and everything going on in the world.
John, Anthony, thank you very much.
Great to be on with you, Plan B. We're following stock to flow. John and I haven't lost our faith in the brilliance of that analysis. So hopefully next year at this time, we'll be seeing higher numbers for Bitcoin.
For sure. Thank you, Anthony.
Thank you again, Plan B, for joining us on Salt Talks for the second time. And thank you, everybody, for tuning in to today's Salt Talk with Plan B. Just a reminder, if you missed any part of this episode or any of our previous episodes, you can access them on our website at salt.org/talks or on our YouTube channel, which is called SaltTube. We're also on social media. Twitter is where we're most active at Salt Conference, but we're also on Instagram, LinkedIn, and Facebook as well. And please spread the word about these Salt Talks. On behalf of Anthony and the entire Salt team, this is John Darcy signing off from Salt Talks for today. We hope to see you back here again soon.